Understand the first candlestick pattern, that is engulfing pattern. So you can see on the screen there are two types of engulfing pattern. First one is the bullish engulfing and the another is the bearish engulfing. So first let us see the bullish one. This is a welcome you to candlestick pattern, and the first candle in this pattern is a red bearish candle, which basically indicates the selling pressure and bearishness in the market. The next candle which is formed is a long green bullish candle, and you can notice this candle has basically crossed the open and close of the previous candle. And by closely observing this, we basically get to know that the bulls have captured the market. The bears have lost their control and the bulls have came in power. So now you know this pattern is a bullish reversal pattern. That means after formation of this pattern along with proper volume. Listen carefully. If the volume near these two candles is higher than the average volume, then this candlestick pattern is very strong. If we find such candlestick with great volume, we get to know that the downtrend in the market, the basic selling pressure in the market will be converted into uptrend. That means the bulls will capture over the market and there will be a reversal in the trend. So now you understand this is how the volume is responsible for a perfect candlestick pattern. The next one is the bearish engulfing pattern. And on the screen you can see the volume near these two candles is usually higher than other days in the market. So we get to know that this is a strong reversal candlestick pattern formed on the chart. And this is a bearish candlestick pattern, a bearish reversal candlestick pattern, which indicates that the uptrend in the market will be converted back to the downtrend. That means that the bears will be taking the market down. So this is all about the engulfing pattern. The next pattern which we have is the harami pattern. So there are also two types in this pattern, the bullish harami and the bearish harami. And first we will understand the bullish harami pattern, and that's how it looks in the market. A long red bearish candle which indicates that the bears are controlling the market, they are dragging the market down. And after that a small green candle, you can see on the screen a green bullish candle is formed, which is basically inside the red candle. You see this bullish candle is formed inside the range of the red candle by not crossing the high and low of the red candle. You know this candlestick pattern indicates that the downtrend in the market where the bears are in control will be converted back to uptrend and bulls will drive the market. But one thing, let me tell you that if you get this pattern with very good volume, if you find such a scenario in the market, it is a very strong buy in the market. It is difficult for this pattern to break, there are less chances of pattern failure, and so it makes this pattern comparatively very strong. The next candlestick pattern is the bearish harami pattern. You see this pattern is basically bearish reversal in the market and the uptrend in the market is converted back to the downtrend. And again if you notice the volume near these two candles has to be huge than the average volume. And so I hope you understood the bearish harami pattern. Next one is the doji candle. Now as you can see on the screen, the doji is a candle which has a very small tiny body but a long wick. Now if in case you don't know what is wick, what is body of the candle, I have explained it in one of my video. It may be flashing above or you can check out the description. Coming back to doji, you can see on this candlestick pattern the open of the candle is almost equal to the close, which basically tells us that the number of bears in the market and the number of bulls in the market are almost equal, and therefore market has become indecisive. It cannot make a decision whether to go in uptrend or downtrend. We can say that there is a sort of battle between the bulls and the bears, and whoever wins this battle will drive the market. But if you anytime observe the chart, if you look carefully at the chart, there are multiple dojis forming. So does every doji means indecision or reversal in the market? The answer is no. You see, a doji with a very huge volume is the most significant. It is the one doji candle which indicates indecision in the market. And I suggest you that the doji candle with a very small volume than the average one, I recommend you to ignore them. Do not take any trade on doji with a very less volume, as they have no significance and meaning in the market and they will cause you loss. And we know that the precaution is better than cure, but in case of market, it is precaution better than the loss. I hope you got this concept. If not, you can rewind some part of this video. You see the first type in this pattern, which is the bullish piercing pattern. This is how it usually looks like. And let me tell you that this candlestick pattern is no different than the bullish engulfing pattern. The only change you can see is in the position of the green candle. It has moved slightly up. Otherwise, these two candlestick patterns are almost the same, where they both indicate a bullish reversal. And you know, if you find a candlestick pattern with good volume, a bullish piercing pattern with a very good volume, you can make out a very strong bullish reversal in the market. That means the downtrend will be converted into uptrend after formation of this candle with such scenario. Next one which we have to understand is the bearish piercing pattern. And now we know that the piercing pattern is similar to the engulfing pattern. The only difference is the second candle is moved up. And also here in bearish piercing pattern, you can notice that this second candle is in the same position. And when such pattern is formed with great volume, it indicates a strong reversal in the market, as you can see on the screen. The next candlestick pattern that we have to study is this spinning top pattern. Now you can see the spinning top pattern is basically a candlestick pattern which indicates indecision in the market. It is quite similar to the doji candle. The only difference is in the body of the candle. You can see the body of spinning top is slightly huge. And remember that the spinning top candlestick pattern with a huge volume has the most significance, and this version of spinning top pattern is the one that we have to consider for analysis. Rest all of them should be ignored. The next candlestick pattern which we have is the morning star pattern. And as you can see on the screen, this candlestick pattern is basically comprised of 3 candles. A red bearish candle where the bears are in control, a doji candle which basically indicates indecision in the market, and after that a green candle is formed, which means that the bulls have taken over the market. So that is simple, that after formation of the pattern, the downtrend in the market, as you can see on the screen, will be converted into the uptrend and the bulls will capture over the market. And remember that like any other candlestick pattern, if this pattern is formed with huge volume, if the volume near this 3 candle is higher than usual, then it indicates a perfect candlestick pattern, and the chances of pattern failure in the market decreases. Next and the last candlestick pattern in this video is the evening star pattern. Now if you look at the structure of this candlestick pattern, the first candle is the bullish candle, a bullish green candle, which we know that would basically indicate bulls are controlling the market. And after that comes a doji, which means that there is indecision in the market. And after that a red bearish candle you can see on the screen, which tells us that the bears have taken over the control of market. Now if you try to analyze the structure of these 3 candles, if you even observe carefully, you can make it out that how the control from the bulls is shifted to the bears. That means first the market is bullish, and after that it becomes indecisive, which basically means that the bulls in the market are becoming weak. And after that we get a candle which is bearish. And this is how you can analyze the sentiment of the market, the minor